We're watching Salesforce this morning, the company beating third quarter revenue estimates and raising the low end of its revenue guidance for the fourth quarter. Investors are closely monitoring the company's AI developments, including its AI chatbots. Joining us now, we've got Brent Thill, Jefferies senior analyst. Brent, great to have you here with us this morning. You're raising your price target after these results. Just walk us into the thesis and what shifted dramatically.
Yeah, good morning. The overall core business continues to stabilize and signs of acceleration, number one. Number two, they finally have caught on to the AI wave. They're late with Agentforce, which shipped at the end of October, but the checks have been really good. Some of the partners we speak to have said this is the best product they've seen in 5 years organically from Salesforce. Salesforce has had a history of acquiring products, not building. So this is a great sign in terms of organic innovation after they took a diet from M&A. I'd say third, as you go into next year, enterprise IT spend should continue to improve. Obviously, with the new administration, you have effectively a better backdrop for spend and potentially M&A. So if they want to do some tuck-in deals, that will help. But I think it's, overall, you have a balance of a company that should accelerate revenue growth into AI and margins that are still well below that of their peers. So their margins are going to go from low 30s to high 30s, still big leverage. So you have leverage on the top line with accelerating growth. You also have leverage in margin. And you have now signs, again, that they've actually given organic innovation to the story. And that's like, we just haven't seen that Salesforce for a long time.
Yeah, Brent, that's very interesting. And I guess just given the feedback, just anecdotally, that you were just referencing some of that excitement on the street, what do you think that tells us just about the strong, I would think, the positioning here of the pricing power that Salesforce is in then going forward?
So it's really early in AI, and there's a lot of fear because if you think about their model, it's a seat-based model. So if you buy one seat of service and you're in a call center, you want to buy one seat if you're in sales, you pay a fee per seat. Well, what happens when all the agents do your job for you? They start answering your calls, they start answering emails. How do you price? So today, these Agentforce AI products are incremental because companies aren't ready to reduce headcount yet. All the checks we have are still a couple of years away. So if you have 100 people in sales or 100 people in a call center, you're going to add Agentforce on top of that to see what you can get in terms of productivity, and then you start removing seats. So the pricing's a little murky, to be honest. I think it's additive in the short term. There's some numbers that are out there that are way too high from our friends on the sell side that are just making up numbers, honestly. And I think it's way too early to make the call. But it's going to be additive in the short term. The question is, does it cannibalize seats? Because I don't need as much Salesforce if the agents are doing the job. So then they have to go to a transaction model, not a per seat model. So there's a lot of open questions in software pricing, packaging, go-to-market. No one really knows yet. And again, we're at the kind of the beginning of this. Right now, it's additive, so it's not going to cannibalize in the short term, but we're watching that long term.
Brent, it got brought up in conversation earlier this week, and it's kind of along the lines of what you were just mentioning. Companies that are more in the experimental phase of some of their AI spends versus where we'll get to the normalization phase of some of the spends for knowing how they can actually use long-term and plan to use long-term some of the agents even that they're working with Salesforce on. How far out do you think we are until that point where investors can then have a better baseline sense of how they should kind of run the calculus or bake that into the numbers?
Yeah, we're still a long ways away. The way I describe it is if you have kids and you watch the movie Despicable Me, you know what these little minions are. They're hard to manage, and the little yellow guys that run around. And right now, all these AI agents are minions. No one really knows how to manage them, what they're going to do. Are they going to behave? Are they going to put their elbows on the table at dinner? But right now, it's really difficult. And so I think right now we're in a early test phase. What you see, again, is AI test deployments in very small segments of corporations. No one's gone all in. Most of the companies that have gone all in aren't really achieving success because it's really difficult to do it with new technology. So right now we're in the minion phase. How do you manage them? How do you keep everyone in line? And then we're going to figure out over time, that deployment. A lot of firms that we talk to are 10% kind of test deployment, and they want to go to 90% over the next three to 5 years. We'll see. And there's different forms of AI, right? So you have application AI, you have security AI, you have developer AI. I'd say that the most adopted AI today is in developers writing code because it's a distinct task. But if you go into Microsoft Office, it's huge. Word, PowerPoint, Excel, Outlook. There's a huge canvas to cover, so it's not as big of an adoption. So it really depends. And again, you can't measure AI, overall. For Salesforce, again, the product just launched at the end of October, so we're really, really, really early.